Morning all, Joe Neighbour here from Signal Centre. It's the 26th of October and we are talking ball today, or I am talking ball today. Steve is not about today. Both of us will be heading up to London in a little while, hence why we are starting bright and early today. So I'm going to get stuck into the latest news. Tesla joined an elite group of companies yesterday with a market value of at least $1 trillion. That came after Hertz, the car rental company, ordered 100,000 Teslas as electric vehicles go mainstream. The car maker is now the second fastest company ever to reach this mark, and it's the first junk-related company to reach that valuation. Elon Musk's wealth has also skyrocketed along with the latest climb, making him more valuable than ExxonMobil, the oil company. So pretty impressive numbers being bandied around. In terms of what's going on between the US and China, they've made some incremental progress in their economic and trade negotiations. The Chinese Vice Premier and the US Secretary Janet Yellen hold their second call in about 4 months. China described the conversation as pragmatic, candid, and constructive. So that is good news. In terms of what's going on elsewhere, we've got the president of Turkey dropping his demand for 10 Western ambassadors to be expelled from Turkey. So he is de-escalating a diplomatic row that has shaken the lira, and we saw that on the charts that we posted earlier in the week. So quite reasonable amount of good news coming out today. In terms of earnings, we've got some big names out today. We've got Twitter, Microsoft, and Google all reporting amongst the big tech firms. We've also got Visa, AMD, General Electric, Texas Instruments, and Eli Lilly set to update the US today. So a big list of stocks. So let's get stuck into some charts then. So I'm going to start off with the dollar index. This is the daily chart, and it continues to trade within this bullish channel. And right on cue yesterday, we saw a bit of a push to the upside, posting a decent green candle. So this level here at 93.43 continuing to act as support. We've seen a bit of a close, mild close above the 10-period moving average, which for me often can be a trigger for a push to the upside or a fresh kick up in momentum. So keeping an eye on that. We are seeing extended move higher today, only by 0.06% on dollar index as it stands. But while trading within this bullish channel, I believe we can be looking for higher prices. So that will have a knock-on impact on euro US dollar. I've marked this chart up for a potential sell opportunity actually, but it's trading within this bearish channel. Overall, we've got this big head and shoulders top pattern that's still very much active in my opinion. We've rallied into this resistance here at 116.64 and we failed, posting this close below the 10-period moving average yesterday and closing out with a bearish engulfing candle as well. So looks like lower prices are set to persist on Euro USD as well from today. Looking at cable, again, pretty choppy really. I continue to say that I think there's got limited opportunities on this at the moment. We've rallied into some downtrend resistance and stalled. We are above the 10-period moving average at the moment, so no real clues as to where this could be headed. It looks like it's flattening off a bit. So I think there are probably still better opportunities around than there are with this pair at the moment. In terms of cable itself, it's not looking great against the Aussie dollar. It's broken down below this trend line here that's been in place since the early part of 2021. I was thinking we maybe formed an inverse head and shoulders or some sort of bottom pattern here. I was hoping that this black line at 85.30 would do a job, but there still seems to be strong demand for these commodity currencies or these riskier assets. So we continue to see weakness against Aussie dollar. If we look at sterling yen, that's broken out above these highs, above these red line at 156.07. We've seen a decent pullback and that do a decent job as well. Buyers have stepped back in. So from a technical perspective, that's quite textbook really. A breakout to new highs, a pullback to retest the support, and it's doing a job and it's holding. Taking a quick look at some of the other riskier assets. So Aussie yen remains below this 85.80 level. Really big resistance level. We posted this big reversal candle as well on the 21st of October and have been so far unable to take that out. Looks like we're going to potentially get a go at testing that or challenging that resolve today. So keep an eye on that for what sort of reaction we get. Similar situation with Aussie dollar, broken out above this double bottom pattern. Holding support here at 74.78. While we consolidate here, it looks as though we are trying to push to the upside again. If we can take out the highs posted on this candle on the 21st of October, then that opens up the upside for a continuation higher, in my opinion. Looking at euro yen, just quickly, that's broken out through this range pattern or double bottom that completed back here on the 11th of October. It was one-way traffic after that, but we have reversed. We've pulled back to the 10-period moving average, which seems to be holding for now. Whether or not we get any consolidation here before a continuation higher, that's what we'd be looking for from a technical perspective. If we get a close below the 10-period moving average, then maybe that will trigger a deeper correction down to these support zones down here at 130.75. Just keep it quite brief, obviously, with no Steve this morning. So Bitcoin, that continues to consolidate around this 64,900 level. We posted this reversal candle on the 21st of October, which is pretty much in line with this previous swing high that we posted back on the 14th of April. We aren't reversing. Well, at the moment, it looks like this support has formed at 59,522. So expecting probably some more range-bound price action in the very short term. We need to see a break above the 66,999 level for a continuation higher, or a break below these support levels at 59,650 to potentially spark a bit of a correction to the downside. Oil was quite interesting yesterday. It posted a bit of a shooting star candle, and this came pretty much bang in line with this resistance level that we've got at 84.99. And why that level is relevant, we have to go back some way on the chart, back to around these kind of levels, which is November 2012, for why that level was relevant. But posting that shooting star candle, I think, is a little bit of a warning sign. If you're looking for a trade on a speculative nature today, you could potentially sell this market here with a stop above the high that we posted yesterday, looking for a reasonable correction to the downside. If you're looking for further confirmation on oil, then for me, I'd be looking for a close below this 10-period moving average. As you can see, price hasn't closed below that level for some time. We have to go back to the 9th of September for the last time it closed below the 10-period moving average. So could be a potential reversal signal here on oil. Looking at silver, that continues to push higher. It's trying to take out these previous resistance levels here from the 3rd of September. It needs to get above 24.84 in order for that to happen. We posted this reversal here on the 22nd of October, so no clear signs that it's going to do it just yet, but we are a little bit on the back foot today, keeping an eye on that 24.87 to 24.84 level. Looking at gold, that continues to be pretty choppy, although it is trading in a bullish short-term channel. So it's taken out this previous resistance here from the 14th of October and looking pretty steady. We've got resistance up here, a cluster of it actually, between 83.74 to 84.44. So in order for gold to really kick on, I think we need to see it take out this level. As you can see, it's trading in a bearish channel. If we can get above these levels here at 1834 to 1844, then we could see a continuation higher over the more medium to long term outlook. Looking at indices today, they are suggesting they're going to be opening on the front foot. FTSE is really flat actually, only 3 points higher at the moment, potentially forming a bit of a flag pattern. So you would call this the flag pole, this the sort of flag setup or pennant setup, and it's trying to break above that. And we're also trying to take out these previous highs that have capped the upside for a number of weeks. So 72.35 is the key level there. We are opening or set to open a little bit above that. We do have some key macroeconomic data out from the the UK tomorrow in the form of the budget. So that could have an impact on things in the very short term. But at the moment, the FTSE looks pretty robust. It's being obviously held up by these oil prices and the threat of interest rate rises. So banks are pretty strong at the moment as well. So potentially something to keep an eye on is these oil prices. We talked about this potential reversal in oil, or certainly a warning sign on the technical charts. So that could have an impact on the FTSE 100 from here. So worth keeping an eye on. Looking at the DAX, that's called up 18 points today, continues to bounce from these lows that we posted earlier in the month on the 6th of October at 14,809. No sign of that slowing down. Looks really, pretty nailed on to go and test resistance at 16,000-ish in the pretty short term. So looking pretty robust here on the DAX front. Let's take a quick look at the US market. So Nasdaq buoyed by the information that came out with regards to Tesla yesterday and looks set to go on and challenge the previous highs at 15,708. We're only a few ticks away from that now. a break above those highs, and we're looking for obviously fresh highs and a continuation higher. So certainly no stopping that at the moment. S&P 500 new all-time highs yesterday. Nice clean break above the previous resistance that capped the upside, which was in place from the sort of 6th and 7th of September. Again, no sign of this slowing down, and set for more upside today, another 5 points or so. Quickly onto the Dow Jones, similar situation. These wedges that I've got on the chart are now irrelevant. We're making new highs above 35,613. So no sign of any of these US markets slowing down at the moment. And we do have, as I said, a cluster of earnings due out today in the form of Twitter, Microsoft, Apple, Visa, AMD, General Electric, Texas Instruments, and Eli Lilly. Okay, looking at the gun to the head trade from yesterday. So let's take a quick look. I went long of the dollar index yesterday when it was at support around about sort of 93.34, 94.44. And now the winner for the first time in what feels like ages, a really sort of substantial one, really, 3.73 R, 38.4 ticks. Really happy with that. Steve went short of gold. Really tight stop for him with 4 ticks, which meant that unfortunately he was stopped out as gold continued to push to the upside. So a decent day all in all yesterday when combining both our efforts together. Need to try and find a new trade today, and going to take a quick flick through some hourly charts to see if there's anything that really takes my interest to potentially have a stab at today. So just quickly flicking through, see if there's any candles that interest me at all. In fact, what I might do is just go straight to oil, because I really like what I saw on the daily chart there. It is highly speculative. We did make these highs yesterday, but we did post a reversal. So let's just sell that now at 83.26 and keep the stop pretty tight. So, I'm calling the top here in the short term. Ideally, it would go there above the highs that we posted yesterday, but in order to get some decent risk reward, I'm going to go at the level of 84.05 as a stop loss. You can see here we've clearly found support around 81.08. We've seen a number of attempts at trying to get below this level, and so far that's been pretty well defended by the bulls. So I'm going to go at that level, 81.11, targeting a 2.76 R return on oil today. Okay, in terms of news out today, earnings really sort of taking front and center in terms of the key interest today. We do have some new home sales data out of the US. We've got some consumer confidence figures. And later this evening, we've got New Zealand trade balance, which is considered the only high impact event today. So quite light on the economic calendar. Keep an eye out for those earnings that are going to be, I believe, a couple before market and mostly after hours. So we'll see what happens with those and whether or not they have any impact and can slow down this rampant charge from the US markets, seeing them up at new all-time highs. That's it from me, short and sweet. I'll be back tomorrow when things will be a little bit more relaxed. We don't have to head up to the office. But until then, guys, trade safe and have a great day. Goodbye.